everyone, and welcome to Talk to the Expert at the Property Investors Network interviews. Today we have with us Steve Tucker from Valuation, who is a leading New Zealand company based around the country who are specializing in depreciation and valuating chattels. Hi Steve, and welcome for this interview. We'd like to speak with you today about the decision that investors need to make when they purchase a property. How important is it for them to be clear if they want to claim depreciation or not?
Yeah, look, it's a really good question. One of the rules within IRD state that that you've got two options. One is to claim depreciation. The second option is if you decide not to claim depreciation, you must declare the property as a non-depreciating asset, and that's where a lot of people get caught up. So a lot of people just elect not to claim, and they just simply don't make a claim in their return. They actually forget that they must notify IRD that they are deeming the property to be a non-depreciating asset. Now, where problems can occur is if you do not declare to IRD that you're not claiming depreciation, then when you sell the property, IRD can turn around and retrospectively determine how much depreciation you should have claimed, and penalise you as such. So it's a little bit of a funny rule, but it's absolutely vital that as an investor you are aware that, you know, if you're not going to claim depreciation, you must declare the property as a non-depreciating asset. Now I sort of struggle with that concept anyway, and I think a lot of people get advice from their local accountant that perhaps they shouldn't bother claiming, and they just, you know, make that decision that, hey, we'll leave it. You know, if I was to say to you, look, I'll give you $100 today, you know, cash in the hand, and, you know, I'll just give it to you. What would you say, you know? And there's not many people that would turn around and say, look, you know, I don't want the money. You know, even if you have to pay it back through depreciation recovery, which is very nominal now, if appropriate at all or if applicable. So, you know, look, at the end of the day, depreciation is all around cash flow. As investors, we need that cash flow. That's what it's about. So I really struggle with that concept anyway as to why someone would not claim depreciation. I think often it's just too hard or they get the wrong advice. But if you are going to not claim, you must make sure that you declare to IRD that it is a non-depreciating asset. And you cannot claim depreciation again on that property in the future. So just be aware that you know, there are some tricky things you need to be aware of.
Considering I've used the company service a number of times, Valuation, I can say that the itemized list that we receive from you guys once the appraisal is being done, it's very, very detailed, up to to things that a normal valuation, even if a valuer including some degree of value, if you put some value on chattels, it's not going to be anything close to the actual itemized details in terms of the valuation. So once those chattels which have been changed through the law change, which are not fixed to the property and all of that, those things will actually go down in value regardless over time. So the depreciation recovery on those items, it wouldn't be great at all. In fact, those values could be worthless after 10 or 15 years or even 5 years if you own the property. So the fear of depreciation recovery is actually even, I could say, a little bit wrong, and an investor is missing on a cash flow opportunity, just perhaps getting the wrong advice.
Yeah, I think a lot of investors in the past have used perhaps their local accountant. And look, I don't have anything against accountants. If you look at the accounting industry, it's massive, and for an accountant to know everything is just impossible. Same with valuation. I mean, we specialise in one area. So, you know, I'm a big believer that as a property professional or as an investor, you've got to use property professionals that focus or you know, specialise in their area. So, you know, I think a lot of people have taken advice from their local friendly accountant who might have more of a business focus than property, and have perhaps been given the wrong advice. But look, at the end of the day, depreciation's there. It's there to be used. It's a valid expense, and you know, and why wouldn't you? The key thing is that I'm a big believer that it's all got to be about doing things right and making sure you get your maximum claim. And you know, we operate very differently as valuers to what most valuers operate as. a lot of parts of the country, people will go and speak to their registered land and building valuer and ask them for a chattels apportionment or a depreciation apportionment. And anyone can do it. You can do it yourself. The key thing is maximising. You know, we are trained in this area. It's what we do. It's our focus.
Absolutely.
And we make sure that we do what we can to maximise your claim. And you know, the difference in what we charge versus someone else is absolutely nominal. But over time that you own the property, the depreciation difference can be massive. So, you know, it is important that you use an expert like ourselves that knows what we're doing, that's up to speed with ORD rules. You know, and as we talked about, it's absolutely, you know, it's little things like not declaring the property as a non-depreciating asset that can get you in trouble. So, you know, use experts, know what they're on about, and you'll be, you know, set to profit from it.
Thank you very much, Steve. Steve Tucker from Valuate. Thank you very much for contributing for this interview.
Thank you.
Cheers.